Good afternoon, San Diego. My name is Eric Lucas and I am a real estate investor here in San Diego and wanted to make this quick video to summarize a presentation that I was able to see last week about the San Diego market and what is coming. So last week, Bruce Norris, aka the Oracle of Real Estate, spoke at the SDCIA, a local investment club here in San Diego, and I really enjoyed the presentation. You know, Bruce is known for correctly predicting market cycles in California really since the late 80s, and he's always been able to typically nail his predictions. Very well respected. A lot of investors and agents look up to him and look to him for guidance on where the market is headed. And to summarize, his conclusion was that we're nearing peak prices here in California, and San Diego County included, but he does not think we're going to have a crash. He thinks we might have a very mild pullback, but any adjustment we do have in the market is not going to be anywhere close to severe as it was in 2009 when we had the housing crisis. So I'll get into details on what Bruce said now, but that was pretty cool to hear. And honestly, is what too, for me, since 2010, I don't really think Bruce has taken a hard line on where the market has gone. He has, I think, kind of left himself some room to backtrack. And while he made some fairly strong predictions, he also put some caveats in there that said, well, if this happens, forget what I said. So to hear Bruce last night take such a hard stance on where the market is going and actually, basically tell people these are your options, this is what's going to happen. The conviction in his voice and the charts that he showed tell me that he's pretty confident in what's going to happen. And from the numbers and what he presented, I would agree with that. So if you don't want to watch the rest of this video, the summary is a mild pullback, but it's not going to be anything too crazy. And his advice was, hey, you know what? You could stay put and keep your rentals. If you want, you're not going to see them, go down in value by half. His direct quote was, we're going to have a very mild ending. So how did he come to this conclusion? He said to get to a peak, we need blockbuster sales, and we're just not there right now. He said that we need loose lending, and lending is still pretty tight. He said that we need inventory to be low, and while everyone right now is complaining about low inventory, he said that inventory right now really matches demand. So demand isn't that high, inventory isn't that high, we're okay there. He said the fourth indicator of a bubble is that you need trustee sales ready to pop. And we're not there yet. He doesn't think it's going to happen. Trustee sales are nearing their all-time low, which usually means that they're ready to ramp up. But for reasons that I'll get into in a minute, he does not see a wave of foreclosures hitting the market. Therefore, there's not going to be enough bank-owned REOs and short sales to drive prices down like happened in the last few crashes. Last but not least, he said that you need affordability to be at super lows. 17% is his famous number. You need inventory to be at 17% or lower. And right now we're at about 29% is a state. The state of California is at 29%. Now that said, some of the counties are different. So he said that Riverside, Sacramento, and San Bernardino counties have a way to go. He thinks you will still see some appreciation there due to affordability not being super low yet. Santa Clara and San Francisco, no surprise here, they're already overvalued. Prices there are already way past peak prices. And San Diego, LA, and Orange County, which is most going to be of most importance to us if you're watching this video, he said that we are close to the peak prices, but we're not there yet. So for those of us in San Diego, LA, and Orange County, if you want to sell now and have enough time to get out before the peak, now might be a good time to do so. But again, if you want to hang on, then you're probably going to be all right. You're not going to lose half of your equity like you might have in 2009 or 2010. And he even mentioned, when he had his report, the California crash, he said get out, and he didn't say get out last week. He said, you could stay put if you want, which I thought was pretty interesting. So why are we not going to have a big rush of foreclosures on the market? One, we didn't get silly with lending, and we're not going to. And nobody is taking equity out of their homes. People got smarter. People were probably scared after the last crash, and they don't want to raid their equity now. They still have a bad taste in their mouth from what happened not that long ago. So again, his conclusion was that we're going to have a very mild ending to this cycle, and for me, that's pretty cool to hear. So no big crash coming, maybe a slight adjustment. That's what he said. And personally, as an investor, I'm pretty excited about this. I think that for those of us in the investment world, we're going to get pretty busy when the market does adjust and adjust slightly, because it means that we'll likely still be able to move our well done flips, but we might have some more opportunities to buy from sellers who are now having a little bit more trouble selling their property on the market. Perhaps some of these beat up homes won't get as much action, and the investors will have more of an opportunity on the MLS to get in there and snag some of these deals that right now are going to first-time home buyers. So that's it. That was Bruce's presentation. He did have some charts available. If you know Bruce, he always has charts available. So I will actually put the link to his charts in the description below. But wanted to make this quick video documenting what I saw last week. I thought it was a great presentation. Always enjoy hearing Bruce speak. And wanted to share, obviously, what I learned last week on my Facebook page, since I know so many of you are agents and investors here in San Diego and Southern California. So that's it for now. Happy holidays and take care.